So today we are going to look at how to set a signal. We will try to look at a couple of different capitals that we are going to look at, but I want to focus much on those that are beginners. All right, those that are beginners and probably they are having small capital to trade. Okay, so let's get into our training. I'm gonna start with the spot market, and wherever applicable, I will tell you that you can also use the same setting when you are trading futures. Okay, so let me share my screen so that we get into the session. Okay, is my screen visible? Is my screen visible? Is my screen visible? If it is visible, give me a reaction if you are able to see. All right. Okay, that's cool. That's cool. All right. So let's get to our business of the day, which is tonight. Let's go and open our RoyalQ application. When you open your RoyalQ application, what you land first, you land on the home page. Okay, you normally land on the home page when you open your RoyalQ application. So for our beginners, here on this application, you can set a strategy. You can set some trade settings and you keep them in your application. Okay, looking at different capitals that you want to use, so that whenever a signal has been given, you do not waste time to go and start editing everything. You just go and apply the strategy. Okay, so this is how you go about it, and we will take it from there. So this is the home page, and I'm currently on the spot market. Okay, the pairs that are appearing on the screen here, they are under the spot market. Now, on the far left, on the far right of your screen, on the bottom side still, there is what we call mine. Okay, there is what we call mine. That is your profile. That is your profile. So when you tap on the mine section, you are going to find this. When you tap on the mine section, you are going to find this. Okay, there is this interface under your mine section. You will see this is your mine section. This is where you log in or you log out. When you tap on system setting here, okay, when you tap on system setting, that's where you are going to sign out, or probably if you are having two accounts, you can switch the account and log into the other account. Okay, so this is under your profile when you tap on the system setting. But my focus is not on the system setting. Here, under this interface, there is what we call my strategy setting here. This is very important. Okay, my strategy setting, apart from other features that you use, like communicating to VIO or to RoyalQ, right, on the feedback here. Okay, but our focus is here on the strategy setting. Okay, it says my strategy setting. So when you tap on my strategy setting, it is going to give you this. Okay, let me delete this one so that you see how it looks like. It's empty. It is going to look like this if you are not having any strategy that you have created and you have saved it, it is going to look like this. So this area, it is for you to create different strategies and keep them. Okay, you can create up to 10 strategies and you save them here. Okay, so you can see here it says you have not added a strategy setting. Okay, I haven't added a strategy setting. I don't have any currently, so I can add it now. Okay, I can press add it now, or either I can use the plus sign um on the top corner right. There is a plus sign. Okay, there is a plus sign here. Can you see this plus sign? All right, if I was having one strategy here, I could use the plus sign, because this one that says add it now is not going to be there if I am having a strategy. But it is showing like this because I do not have any strategy saved. Okay, but if I do have a strategy already and I want to create another to add, then I will tap on the plus sign here to create a new strategy and add to the existing ones. Are we together here, ladies and gentlemen? Are we together? Let me see. Are we together? Are we together? Are you following? Are you following? Okay. All right. I think I've got enough yeses. Okay. Let's go back. Now, I'm going to tap on the add it now. I will tap on the add it now. All right. So when I tap on the add it now, okay, this is the page that is going to come. On this page, you can see by default, okay, this is by default according to VIO, according to RoyalQ. Okay, these are recommendations that are coming with RoyalQ in default settings. Now, there is a couple of things here that you are going to look at. I'm sure on our Saturday new user orientation, I think the trainer sometimes passes by this side. Okay, okay. So let us look here. There is what we call the risk type. Okay. Under the risk type, when you tap here, you are going to see different types of recommendations that RoyalQ is recommending to us as users on the platform. Okay. Remember, we are trading on the platform. So how much are we willing to risk? Okay. How much are we willing to risk? That's why we are saying risk type. There are 3 different risk type here. So when you tap on it, you are going to see that there is radical. Okay. There is radical, which is the first risk type. There is conservative, which is the second risk type. And then there is steady, which is the third risk type. The difference between radical, conservative, and steady, it is in the setting of the margin configuration, margin call configuration in terms of margin call drops. That is the only difference. Okay, so when you tap on radical, when you use, for example, I want to choose radical. Okay, I am putting radical there. Can you see? Switching the risk type will change the default value of the strategy setting. Are you following here? If I switch the risk type, I am changing the default value of the strategy settings. Okay, so I am confirming so that I can switch. Remember, I think I was having the other risk type, but now I want the radical. So when I confirm this, then the radical type is going to be applied in my settings. Okay, here is radical. Now, I was saying that the only difference between radical, conservative, and steady, it is about how the margin configurations are set. When you tap here under margin configuration, I want you to look closely what I am talking about. Okay, I want you to see the difference. So you are able to choose which one works better for you. Which one do you want to use? All right. But I'm also bringing some recommendation on the settings. Okay. So let's tap on margin configuration so that we are able to see the differences between the three. So when you tap on margin configuration, okay, the difference here, it is about the margin call drop here. How the percentages, okay, are aligned up. If you are to look closely here, these are 7 margin calls, right? These are 7 margin calls. So there is 3.5%, there is 4.5%, 4%, sorry, another 4%, another 4%, another 4%, and then there is the 60th one, which is 5%, and then the last one is 6%. So when you add, I want you to see this. Okay, to our beginners, it simply means when you start your trade, okay, you activate your trade. You are trading, for example, in the spot market. From your point of entry, okay, let's say that you have entered a trade here and your first buy-in amount is $10. Okay, the robot has bought with $10. Now, from point of entry, there are 2 things that are going to happen. Okay, one of the things is going to happen. Okay, it's either after the robot has bought with $10, the price is going to go up. All right, from where you have entered the trade, the robot, it will buy first time with your first buy-in amount. In this scenario, we are using $10 as an example. So there is a possibility that after buying with $10, the price may shoot up. So if the price goes up and it reaches your targeted profit, let's say you are collecting 1%, maybe you are collecting 2%. So from point of entry, the price shoots up and then it reaches your targeted profit. What is going to happen is that the robot is going to sell the stock that it has bought with the $10. In this scenario, I want you to listen, to listen to me closely and follow me as well. Okay? This is your point of entry where you are entering the trade. So after the robot has entered with $10 first buying amount, there is a possibility that the price may go up. If it goes up and then it reaches your take profit, let's say 1%, what is going to happen is that the robot is going to sell the stock it has bought with $10. In this scenario, the robot is not going to buy your margin calls because after entering the trade, the price went up. Okay? The price went up. So for the robot to buy your margin calls, after it has entered here, the price needed to go down. I'm talking of the spot market. Please give me attention here. Okay? If you are trading in the spot market or you are longing the market now in the futures section, you are longing the market because the spot market and the longing is the same. All of you are saying price is going to go up. Okay? Now, for the robot to buy your margin calls, it simply means from position of entry here, okay, it has bought with $10, then price should go down. It should drop. Now, with what we are having here, it means that from the point of entry where the robot bought with $10, the price must go down or it must drop with 3.5%, so that the robot is going to buy your first margin call. Okay? This is where your margin calls will be bought. The price should drop with 3.5 after the robot has bought first time with first buy-in amount. Price should drop. Then the robot is going to buy your first margin calls. All right? So from point of entry to where the first margin calls is going to be bought, what is the distance? That's what we call a margin call drop. Okay? From the point of entry to your first margin call, what is the distance? So the distance is 3.5%. So once the price drops by 3.5%, it's when the robot will be looking to buy. It is not going to buy immediately. Remember, we do have other features which we call buy-in callback. Okay, I'm going to explain that. But I want you to understand what is this margin call drop. So this is under the radical risk type. Okay? According to the radical risk type, these are the settings that comes with radical. Okay? These are the settings that comes with radical. So you can add here, if we are to look at radical, I want someone to help me add these margin call drops so that we are able to see what is the total percentage drop. When you add 3.5, someone should be helping me to add this. When you add 3.5 and then you add 4 and then you add another 4 and then you add another 4 and then you add another 4 and then you add a 5 and then you end up with a 6. These are 7 margin calls. These are 7 margin calls. All right? These are 7 margin calls. So you're going to add 3.5, which is the first call drop. Then you're going to add 4%, second call drop. And you add another 4%, which is the third call drop. And you add another 4%, which is the fourth call drop. And then you add another 4%, which is the fifth call drop. And then the sixth call drop, it is 5%. And the last one, which is number 7, it is 6%. All right. So when you add these, you will discover that the total call drop percentage, it is around 30. Okay. Is it 30 point what? 30.5. Am I correct? Am I correct? When you add these call drops, they are going to give you a total of 30.5%. Am I correct? Am I correct? Where are the mathematicians? Where are the mathematicians? Guys, where? Don't just give me yes. Some they are getting 26.5. I don't know where's the 26.5 coming from. Hey guys, 3.5 plus 4 plus 4 plus 4 plus 4 plus 5 plus 6 is 7 margin calls. We are using 7 margin calls in this example. Okay, right. You missed 1 4. Okay, all right, I get it. You are forgiven. You are forgiven. Now, so the radical, it comes with a 30.5% margin call drop if you are going to use all the 7 margin calls. Okay, remember this it works with the capital that you want to put in that particular trade. So you may not use 7 margin calls, probably you may use 5. Okay, but I wanted you to know the difference between the radical and the conservative and the steady. So the radical comes with 30.5% margin call drop in total. Okay, are we together here on the radical? Are we together here on the radical? Are we together here on the radical? Are we together? Okay, all right. So let's go to the other risk type. Let's save here. And then we change from radical, we come to conservative. Okay, so conservative is like those that are afraid of floating loss too much. Those who says my money, my money, my money. Yes, conservative is better for them. Okay, so I want you to see this is also 7 margin calls. So the conservative one, it is having this type of setting when it comes to margin call drop. The radical was starting with 3.5. If you remember, it was starting with 3.5 here. But now, with conservative, it is starting with 4%. Right? So when you add 4, let's add it together. When you add 4 plus 5, okay, plus 5.5, okay, which is the third margin call, and then plus 6, which is the fourth margin call, and then you go to 5, the distance. Can you see from 4, how it has shifted to 5? So when it comes to margin call number 5, we are having a 10% drop alone. This is conservative, all right? And for the robot to buy again, if the price continues to go down, it means it is going to buy again after the price drops again with 15%, which is margin call number 6. Okay? Margin call number 6. And then the last one is 18. Okay? 18. So the conservative, it is giving us a total of how much? A total of how much? The conservative one is giving us a total of how much? How much? It's only Musa who is doing mathematics here. Oh, Robert is also here. All right. Mutesi. Okay. So the conservative is giving us, thank you so much. It is giving us a total of 63.5%. It means that for the robot to buy all your margin calls, these are 7 margin calls, from margin call number 1 to 7. For the robot to buy all these margin calls, the price of the coin that you are trading, it should drop with 63.5%. That's what it means. Okay? It should drop with 63.5%. If you are longing the market as well, it means the same. The price should drop with 63.5. Okay? Now, if you are shorting the market and you are trading with margin calls, it means the price should go up. Remember, you are saying price must go down. When you are shorting the market, you say price should go down. So for the trade to go against you, it means price should go up. When you are shorting the market now, I hope I'm not confusing anyone here. Okay? When you are trading in the spot market and you are longing the market in the futures, for your robot to buy your margin calls, price should go down. It should drop. But when you are shorting the market in futures, it means price should go up for the robot to buy your margin calls, because going up, it is against you, since you said price should go down. Is this clear, ladies and gentlemen? Is this clear? Is this clear? If it is clear, please give me a yes. If it is clear, give me a yes. We are just trying to find out between those risk types. Okay, we haven't started looking at different capitals yet. We are just trying to find here what is inside your robot. Okay, so if you just want to use these ones, you should know what you are doing. Okay, so let's save this one. This is the conservative one. Let's finish with the steady. The steady one is the one that suits those that are afraid of going to the village. Yes. The steady one, it is the ones, those who doesn't want to go into ICU. So you can use the steady. Yeah. So let's open steady and then we see we are confirming now we are changing to steady. Now let's come here on margin configuration. Okay. On margin configuration under steady. Okay. So the steady is much closer to the radical one. It's only the conservative one that is having a lot of margin call drop, having a bigger margin call drop percentage. All right. So this is a little bit steady. All right. This is a little bit steady. So you can see that the steady one, it is having 3.5. Okay. If we are to add 3.5 and then we add 4 and then we add 4.5. Okay. And then we add 5.2. 5.2. Okay. And then we go to 8. We add 8. Right. And then we add 10. The last one is 12. Okay. This is the steady one. So the steady one, it gives us how much in total? The steady one, it gives us how much in total? The steady one, how much in total in terms of margin call drop percentage? Anyone who is there yet? The steady one? The steady one? Kabaki, thank you so much. Loveness, where are you getting the 4? You are 47.4. Loveness, where are you getting the 4? And CC is giving us for 472. Hey, she forget to put the comma. She forgot to put the decimal between the 47 and the 2. So it's 472. All right. It's a joke. We're just joking. Okay. So it's 47.2. So normally, when you open any trade, okay, when you open any coin in RoyalQ and you are trying to set it up, you will see that the recommended one that comes by default, it is the steady one. Okay? It is the steady one. For example, if we can go there, I just want to prove what I am saying here. We are saving this and we are going back. We are going back to the home page, right? I'm going to open any coin here. I haven't traded it before. Okay? I'm going to open this one. Let's say that we want to set this one. All right? We want to set this one. So when you open the trade setting page, okay, you are doing it manually. And then you come to the trading parameters. Then you open on margin configuration here. Okay? Can you see what is here? It is the steady one. It normally comes with the steady one. This is what I was trying to tell you, that whenever you pick any coin, you are trying to set it up the risk type that comes with the trade setting or the trading parameters, it is the steady one. So it is up to you to change it. This is what I wanted you to see. Okay? You must know your board very well. Right. So let's go back to our mine section. All right. Let's come back here to our mine section, and then we go back to edit. We are not done yet. We were looking at the risk type. Okay. Now here there is what we call remark. It means you can give a name to the strategy. Okay, it is optional. It's either you can give a name or you don't give a name. It's up to you. But if you want to say this strategy is for $100, for example, you want to give a name, $100 setting, $200 setting, $50 setting. So you can write that name under here where it says optional. So you can do this way. For example, can you see the moment I tap on optional? So I'm typing $100 setting. Okay, $100 setting. Okay, $100 setting. Okay, so I am giving the name like this, meaning to say, whenever I save this strategy and I want to pick a trade, and in that trade I want to use $100, I'm going to come and click on the $100 setting. Okay, don't forget now, one more thing before we use anything here. I want you to make sure that unless you choose to do so, okay, unless you choose to do so, but I would recommend that you should trade in the one shot strategy period. Let it be one shot unless you choose to do so. Okay, you want to cycle that particular trade. It should sell and buy again, sell, buy again, the same coin. It means you are in a cycle mode. Okay, the period that you are using, it is a cycle period, the strategy period. It is a cycle. But when you put it in one shot, okay, it means once this trade is closed, the robot is not going to buy again unless you give instructions, unless you command the robot to buy the same coin again. That's what it means, one shot. Is this clear? Is this clear? Okay. So I want to edit the margin call limit. How many times my robot should buy? Okay. How many times my robot should buy? So I want to use 6 margin calls, for example. All right. The first buy-in amount, always you are going to change it. Whenever you are setting any trade, this first buy-in amount changes. So it is better for you to change it when you are setting the trade. Because if you put now your first buy-in amount, for example, you put 10 to be your first buy-in amount. The moment you come and pick this strategy to use, it is going to go back to the recommended one or the default one. It goes back to it. So it is better for you to edit the first buy-in amount when you are setting the trade. But make sure that you have done all the settings correctly here. Okay? All the settings are done correctly. You have put all these settings that are needed. I'm not sure if I should do all these settings tonight. I think it might take us time. Okay, maybe for our new business partners. Okay, here you will edit your take profit. You are going to change it according to what is in the signal. When it comes to take profit, they are telling you how much should you put. Okay? Now, there is what we call whole position take profit callback. If you attend our Monday sessions, Coach Manish always handle this part. He normally explains what is whole position take profit callback. So it simply means when the take profit has been reached, which is 1.3%. Remember, we are trading upward movement of price. So when the price is going up like this, okay? So let's say that from here, when the robot entered and then the price went up, this movement here, let's say it is equivalent to 1.3%. Okay? So the robot is not going to sell here where the 1.3 has reached. It will wait for the price to drop a little bit with 0.3, which we call whole position take profit callback. In short, we just call it a callback. Okay? So your profit is going to drop with 0.3, and then it means the actual selling will happen here after this has dropped. So initially, you are collecting 1% because 0.3 is gone. You are remaining with 1.3. I mean 1%, sorry. Okay? So probably someone is asking, what is the importance? Why should I put the 0.3? I want to collect the full 1.3. It is okay. You can put 0 here. Okay? You can put 0 here. But I want you to know that you are missing out. Where? Sometimes when the price is moving like this, okay? Sometimes the price will shoot without dropping. It will shoot without dropping. So sometimes the price can go high up to 5% in profit. Okay? The price will go high up by 5%, but your target profit was 1.3. What is going to happen? The robot is going to give you the full 5% instead of the 1.3%, simply because of this callback that you put here. So if you put a 0 here, it means if the price rises by 5%, the robot will only give you your 1.3. You are going to miss the excess. Okay? You should understand why we put a callback here, a callback percentage. It is because of that. Sometimes prices may shoot up. It might go to 5%, just one movement going up once without dropping, you know? So in that scenario, you are going to have excess profit. But if you put 0 here, your robot will only give you the 1.3. You are limiting the robot to give you more profit in case that particular coin pumps up. It pumps and then you get excess, right? So some will use the 0.3 that comes here by recommendation with RoyalQ. What does this mean? Okay, what does this mean? If price is moving this way, okay, then it drops by 0.1. Okay, price moves up, it drops by 0.1. What is going to happen? Is the robot going to sell? Tell me something. If the price is going up and then it drops a little bit by 0.1, but your callback is 0.3, is your robot going to sell? If the take profit has been reached, is it going to sell? No, it is not going to sell because the callback here is 0.3. So it will continue to go up. It means you are getting more. Okay? You are getting more when you put this one here. But there are some that says, once my 1.3 has been reached, don't waste time, robot. Don't waste time. Sell it, please. So some they will put 0.1 here, so that any slight drop of the price, let the robot sell and get out of the market. Some they will use 0.01. They are simply saying, when my profit has been reached, I don't want to wait any longer. Let the robot sell and give what is mine. I'm gonna go and look for another coin. That is the only difference here. So when somebody is saying, what is the difference between 0.3, 0.1, 0.01, I just want you to understand what are these things working? Okay, how do they work? So if the price is rising and then it drops with your callback. So if your callback is 0.01, it means it is a small drop. It means the robot is not going to waste time here. But if it is 0.3 and then the price drops by 0.1, the robot is not going to execute a sell. The price will continue to go. That is the only difference here. So when you are applying 0.01, you are applying 0.1, you are applying 0.2 or 0.3, you should know what are you saying to the robot. Is this clear, ladies and gentlemen? Is this clear about the callback? Is it clear about the callback? Somebody says no. Who is saying no here? Did I see some no's here? Oh, you were responding to what I was asking. Okay. All right. It makes sense. It makes sense. Now I got you. Can we proceed? Can we proceed? Can we proceed? Ransom. Ransom said I should explain again. Okay, Ransom, this is what I'm saying. I'm going to explain slowly now for you to get it. When you are trading with RoyalQ, okay, you are buying at this position and you are expecting price to go up. When the price is going up, it does not move in a straight line. Okay? It does not move in a straight line. It goes up. When you look at the candle, when you're looking at candles, you will see that the candle will fill up a little bit, it will come down. Okay? It will fill up a little bit, it comes down. Then it goes up a little bit, it comes down. It goes up a little bit, it comes down. That's how it moves. When you find a candle or when you find a coin that is just going like this, okay, sometimes you will find one. It means the volume, there is a lot of volume in that particular trade session. So you see that one candle is just pumping. When it goes up, it will stop here, okay? When it is stopping, it doesn't drop at all. It will continue to go up, it will stop here. It doesn't drop, it goes up again. Okay? Sometimes you will find such in the market. But normally, this is how price moves. It will be moving in this manner. It will go up, come down, go up, come down. Now, ransom, this is what I'm saying. This is your entry position. Entry positions, it means that's where your robot has entered the market or it has bought your first buy-in amount. Here, it has entered here. So it is expecting either price should go up so that it can sell or price should come down so that it can buy your margin calls. So when the price is going up like this, from point of entry to this level, let's say that it is 1.3% take profit. It means the price has gone up by 1.3%, which is your take profit that you have set in the robot. So we are saying it has reached your take profit. it wants to sell. Is it going to sell immediately? No, because there is what we call a take profit callback. So the callback is the callback. It means price is being called back. Okay? Price is being called back. It should come down. Someone is calling the price. Come back. I want to talk to you before you continue. Okay? There's something that I forgot. Please come back a little bit. So the price comes back. When it comes back, it drops with a certain percentage, which we call a callback. So if you put 0.3 and then the price has been called back by 0.1, okay? You put 0.3, then the price has been called back by 0.1. Ransom. Is your robot going to execute a sell? Is the robot going to sell here? Give me an answer, Ransom. Is it going to sell? Is it going to sell? I want an answer. If you are still here, Ransom. Is the robot going to sell? If you are understanding what I'm saying. Where is Ransom? Okay, thank you. So it is not going to sell. It will only sell if it drops with your targeted call back. Okay, so what is the advantage? The advantage is that since it has failed to sell here, it is going to continue going up. You are collecting more. You are going to get excess because it has not sell when it reached 0.1. Okay? Because your settings are 0.3. You are getting more. So I was saying that there are people here who says, I do not want the robot to wait any longer. If my 1.3 has been reached, let the robot sell and give me my money. Okay? So they are not going to use the 0.3 because it's bigger. They are going to use 0.1. This one is easy for the robot to reach, especially when the price is going up and it drops. Okay? Some they will use 0.01. They are simply saying any slight movement down, let the robot sell. I don't want my robot to take long. As long as my 1.3 has been reached, let it sell. That is the essence of the callback, the profit callback. Okay? Is the English Englishing now? Is the English Englishing now? I want us to go to capital management, capital setup. Capital setup. I want us to go to capital setup. Are we together now? Are we together? Okay. All right. Zaina says I should continue. So let me continue. Let's come back here now. So here we are going to do different trade settings. I want to start with $50. Okay? We are calling this strategy $50 setting. All right? $50 settings. Now, when you are having this amount of capital and you are trading, these are just recommendations. They may not be the best. Please understand me. These are not the best because the capital is still small. You know, when something is small, you try to fit in, to make sure that it fits in, it works. So it is not the best. Okay? It is not the best. So if you are having a capital of $50, you can start a trade with $10 first buy-in amount. Okay? You can put $10 first buy-in amount. All right? First thing, $10 first buy-in amount. Now, out of your $50, how much is left? Here, I'll be asking you questions so that we go together. The robot has used $50 to buy first time. First time, the moment you say activate, and then you activate and you see that there is a pause now. A pause is showing in red. It means the robot, the trade has been activated. So how much is left out of your $50? How much is left? How much is left? How much is left? $40. So the $40, we are going to use it for our margin calls. We are going to use it for our margin calls. So we want the robot to buy how many times? 6 times. Okay? The robot should buy 6 times. Now, if this is our first buy-in amount, $10. If the robot is going to buy 6 times, is the $40 enough? Please give me an answer in the chat. Our first buy-in amount, the robot has entered with 10. We are left with 40. But we want the robot to go to the market 6 times. Is our $40 remaining capital enough for the robot to buy 6 times? Is it enough? Is it enough? It is not. So what should we do? This is what we are going to do. But sometimes I want you to note, okay? There are other coins when you are trying to change. You are going, once the robot buys with $10, ladies and gentlemen, it buys with $10, okay? Immediately after it has bought with $10, you will come and edit, okay? You will come and edit. You can edit the trade settings again. So you will come and remove the 10 and you put 5. Okay? You will come and remove the 10 and you put 5. Or you can put 6, as long as the $40 will cover the 6 margin calls. Okay? I want you also, you should use your common sense here. It should not be rigid. It should not be what I am saying should remain the same way. No. Okay? I want you to play around with your capital. If the robot has already used $10 and you're left with 40, it means how much you are going to put here so that the robot can buy 6 times. In this scenario, the robot is buying one time. When it comes to here, how many times should it buy? Okay, if it buys one time, it is using how much money on that particular trade, on that particular margin call, sorry. So we do have what we call, where is my pen? Multiple buy-in ratio. This is our capital. Okay, this is our capital. So it simply means if the robot buys with $10, for the robot to buy again, the price should drop by 3.5. Okay? So when it is buying, after it has dropped by 3.5, it is going to use, let's say that we did not edit the $10. It is still using $10. So it means it is going to use the $10 times 2. When we talk about multiple buy-in ratio, it means 2 times 10. If we are still using $10 on the first buy-in amount. Okay? So in this scenario with our $40, it means if it is going to use these settings here, the money is not going to be enough because it needed to buy times 2 here, 10 times 2, 4 times 4 times 10, 8 times 10. That's what it means. So we are going to edit. That's why I was saying this is not the best, okay? We're just trying to fit in. We want the robot to buy one time on each and every margin call. It should buy 1, 1, 1, 1, 1. Okay? We are having 6 margin calls here. We are having 6 margin calls. Okay? So if the robot is using $10, is our $40 going to be enough to buy 6? No, it won't be enough. That's why I was saying, once it buys with $10, let me save here. Once it buys with the $10, come and edit. Remove the 10 and put 5. Or you can put 6 if it works. 6 times 6, okay? It means it's around 36, right? Yes. Am I correct? So you can put a number here that is going to resonate with your balance. But in this case, the robot will be buying one time, whenever it is buying on each and every margin call. So if we are using 5 here, for example, we are editing after it has bought, and now we are editing to 5. Meaning to say, when it starts buying the margin calls, it will be using $5 now. Then we save this, right? We save this. So if we come back here and edit, I want us to calculate the money now. I want us to calculate the money now. So it is going to buy 6 times because we are having 6 margin calls. So 6 times 5, it means we are having 30. And we are having a balance of $10. That is according to our choice. We still want to have a balance. If we want to use all of it, then we are going to adjust our settings. And probably we tell the robot somewhere here, instead of buying 1, let it buy 1.5. Okay? We can give 1.5 here, 1.5 here. Okay? We are trying to put all the money now. We are trying to put all the money because we don't want anything to remain. But if you are saying, no, I don't want my wallet to be empty, then you can use the $40. Then you keep your 10. It is going to buy 10 first buying amount. On margin calls, it will be using 5. Then the total is 40. You are remaining with 10. That is a $50 capital. Are we okay? Are we okay? Those with a small capital and they did not know what to do with their capital, but still they want to trade. But it's not the best, like I'm saying, but you still want to trade. Is it okay? Is it okay? Is it okay? So you can adjust to make sure that it fits your capital. Okay? What I am demonstrating here, it is just an example. How do you calculate or how do you come up with the money, the total amount of money which is needed? Just the formula. Okay? So if we are together, then it's fine. What about someone who is having $100? Okay? What about someone who is having $100? So we can still have a different approach to the $100. Okay? To the $100, we can still have a different approach. For example, let's come back here. Let's confirm this one. Okay, so we are having $100. $100 capital. Okay, so we are going to divide it. We are going to remove, we want to use 20%. That one we were using 10% to be our first buying amount. Okay, the $10, it is acting as 10% of our capital. We are making it to be first buy-in amount. Now we are having $100. The person with $100, they can opt for 20% first buy-in amount. They are remaining with 80. Okay? They are remaining with $80. The robot has bought first time with 20. Now they are remaining with $80. Let's assume they are still using 6 margin calls in this scenario. They are still using 6 margin calls, right? Now, the balance is 80. And they want the 80 to go into the market. Okay? They want the 80 to go into the market. Someone would say, I want my robot to use, after it has bought with $20, I want my robot to start buying my margin calls, these 6. It should be using $10 on each and every margin call. So in this scenario, one can increase their margin calls to 8. This is the first scenario, okay? I want you to listen here. This is the first scenario where the robot will be buying one time. Whenever price drops, let the robot buy one time with the $10. Okay? So it means this person is using 8 margin calls, and once the robot buys with the $20, okay, the person is going to edit their first buy-in amount. Okay? Where did I, okay, I made a mistake here. Instead of putting the 8 here, I put it there. Okay, I was supposed to put the 8 on the margin calls. So this is 20. The robot has bought. We are remaining with 80. Now we want the 80 to be used for margin calls. Then we will edit. We will put it 10. So that when it is buying 80 times, it is going to use $10 on each and every margin call. So we are going to edit here and put 1, 1, 1, 1, 1, 1 until the end. But this is not the best approach to the market. I'm going to explain to you why. Okay? This is not the best approach. I know there are some who love to put more margin calls, and then it buys one time. They want the robot to buy many times. But I want you to understand this. We are trading with a martingale robot. It uses what we call dollar cost averaging method. Okay? So when the dollar cost averaging method is being applied, I want you to understand this. When the price drops by 4%, the robot will buy only one time with $10. Okay? And then after it has dropped with 4%, it drops again with 4.5%. It means the price of the coin is becoming cheaper and cheaper. But when the price is becoming cheaper, you are still buying one time. You are not buying enough stock since it is cheaper. So you are not taking advantage of the dollar cost averaging method. So when you set your settings like this, you are not accumulating the coin at a cheaper price, because every time it drops, you are still buying only one. Are you understanding what I'm saying now? Are you getting it? Because we want to buy when the price drops. So if the price drops, it means it is cheaper. So if we only buy one time, we are buying less stock. Remember, our profitability comes from how much stock the robot has bought. Okay? There's no magic here. How much stock the robot has bought. If it did not buy enough stock, it will sell the 1.3%, the 5%, the 2%. It will come from the amount of stock that was bought. So when you're buying one time, you are not taking advantage of the falling of price. So that's why I'm saying this is the first approach, which is not the best. Okay? So probably one could say, I do not want to buy more margin calls. I want to buy few margin calls, but every time when the robot when the price drops, let the robot accumulate more of the asset. So I'm going to reduce my margin calls, for example, to 5. Okay? Maybe let's use the 6 that we were having. Let's use the 6. Okay? Now, let's come here and do some changes. Let's do some changes here. When the price drops first time, let the robot buy one time. Okay? When the price drops again, let the robot buy, let's say 2. Let's put it 2 here. 2 times. Okay? When the price drops again, let the robot buy 2.5. Can you see? Here it bought less, but here it bought more compared to the first. And here it is going to buy more compared to the second. This is the approach now. Here, we are also increasing. Okay? Let's put 3 here. Okay? And then here we also increase a little bit. Let it buy with another 0.5 extra. Right? And then it comes here. It buys with another 0.5 extra as well. If it was 3.5, let's put 4 here. So let's add. Let's add these figures. Let's add these figures. Let's add these figures. 4 plus 3.5. Okay? Or let's start from the top. Let's not start from the beginning. From the end. Let's start from the top. So it is 1 plus 2 plus 2.5. Okay? 2.5. And then plus 3. Okay? And then plus 3.5. Okay? And then plus 4. So when you add these figures, it is going to give you something like 16, if I'm not mistaken. It will give you 16. Okay? Now, how much was our first buying amount? It was what? It was 20. But when it buys the margin calls, let's adjust now. Let's remove the 20 here. Let's remove the 20. If we are going to put 10, if we put 10 here, remember we are left with $80. That is our balance. We are left with $80. So if we are going to use 10, it means the 16 times 10, we will need $160, which we don't have. Okay? Which we don't have. We are only having 80 here. So we are going to trim the 160 to 5 now. We are going to reduce the $10. We put 5 here again. So if we are going to use 16, remember it will be buying 1, 2, 2.5, 3, 3.5, 4. Okay, so 16 times 5, okay, 16 times 5, which is our first buying amount for the margin calls. It has bought already with 20. But now when prices started to go down, let it use 5. So it is going to buy 16 times. So 16 times 5, which is our first buying amount, I'm sure it is going to be enough. Okay? It is going to be enough, which is going to be 80. Am I correct? So we have involved the $80 plus the 20, it is becoming $100 in total. So the robot has put in $100 if it buys the 6 margin calls, because sometimes the price may not drop, or it might buy maybe 3 times, or it may buy 2 times. So it's not all the time that the robot is going to buy all the margin calls. Sometimes it doesn't, because buying margin calls depends on the falling of price. Are we together here? Are we learning? Are we learning? This session, normally it becomes longer when you are doing different types of capitals. And you need to move with a speed whereby everyone should be able to understand. That's why I was saying if we are going to have enough time, we will look at different capitals. Okay? But this is just the start up. So we have done the 50, we have done the 100. Can I give you some homework? Can I give you some homework? Looking at the strategies that I am giving you, whether the robot should be buying 111 or it should buy in multiples, so that you benefit from the dollar cost averaging method. Okay? Can I give you homework? Can I give you homework? Can I give you homework? Kabaki. When the fuel from your car get finished, does the car move? Kabaki. When you are driving a car and then the fuel get finishes, do you continue driving the car? Do you continue driving the car? So when the robot finishes the amount, it stops buying the margin calls. If the capital was not sufficient for the margin calls that you put, let's say you put 6 margin calls and the capital is only for 3 margin calls. When the robot finishes buying those 3 margin calls, it will stop. It is not going to buy the remaining 3 because there is no longer capital. Okay? So it will be waiting now to sell whatever it has bought. No, you are not liquidated. I was talking about the spot market here. You don't get liquidated in the spot market. Okay? You don't get liquidated in the spot market. Allow me to focus on the spot market because it differs. Okay, there are other things that I needed to explain when it comes to futures market. The issue of the margin calls, where do they apply and where should they not apply? Okay? Which mode should you use margin calls when you're trading futures, and which one you shouldn't? It is something that you need to differentiate. So I'm going to explain in the next Zoom when we meet. But here I was focusing on the spot market. All right. So you do not get liquidated in the spot market. The robot will stop and then it will be waiting for the price to come back so that it can sell whatever it has bought. Anyone with a question here, ladies and gentlemen? I can take questions now. I can take questions now if there are any questions. I'm ready to take those questions. You can raise your hand and I'm going to allow you to unmute so that you can ask. Or you can just come in the chat and then type your question there. Okay? So for the futures settings, we're going to have another session. I'm going to explain why in scenarios where you are using margin calls, okay, and in scenarios where you are not using margin calls, what is going to be the effect? Because remember, in futures we trade contracts, so we normally focus on our margins. Is our margin protected? Okay, so the buying of the margin calls, somewhere somehow it affects, depending on where are you trading. Are you trading in cross mode or you are trading in the other mode? So I don't want to mix this. You're going to get confused. Let's handle one aspect at a time. Anyone with a question, ladies and gentlemen? Let me stop sharing the screen here. Yes, on the margin call drop, I would recommend that you should not edit. You leave it like that. The next meeting that I'm going to come with, I'm going to explain if you are having ideas to edit, how far can you go? Okay? But now I want you to trade managing your capital. It is better for you to have your capital than to lose it. So it is better to have a good margin call drop. Okay? So next time we are going to discuss now. I know there are people who says, I do not care. Okay? I do not care about the falling of the price because I do have good capital. So I want my robot to put in good money because my profit comes from what has been bought. So I want my robot to buy enough stock so that when it sells, it should give me good profit. So on that one, we're going to discuss. Okay, there are different types of people or different types of traders. There are some that are having good capital. Okay, they really want to put it into the market so that whenever the trade has been successfully closed, they should be able to have the intended take profit that they wanted. But here we are focusing those that are having small capital. We don't want your capital to be swallowed by the market. So we are protecting it. So you are going to be earning small, but at least you do have your capital. That's our focus for tonight. Okay? Those that are having good capital, we will come and talk about it. Achidri says I should repeat on the 0.1 and 0.01. Okay. This is what I was saying, Achidri, for the sake of brotherhood and sisterhood. Let me share my screen again. Yeah, when you are a teacher, you must be patient with students. You must be patient with students. Don't say, but I explained, you did not understand. Where were you when I was explaining? We don't do that. Okay. So this is what I was saying. I'm going to use this screen that you are looking at. Achidri, this is what I was saying. Okay. When you are trading with the robot, when the robot enters the market, it normally enters at a certain price, which we call, probably it might be a current price of that particular coin. Okay. So let's assume that the robot is entering the market here. When you say go buy, it starts buying from this position. So when it is entering here, it is entering with your first buying amount $10, for example. So once it has bought, it is waiting. Is the price going to go this direction or it will go this direction? When the price goes this direction, the upward direction, it is not going to buy your margin calls. Okay? It will be focusing to sell what it has bought with $10. Hence, I was explaining that there are people who says, I want my robot to buy so that I can benefit more when it sells. They understand that sometimes the robot may not buy margin calls. Sometimes price may not drop drastically. Okay? But let's stay here and say $10 capital, $10 stock has been bought. Price goes up. When the price is going up, it does not move in a straight line. It will be doing like this when it is on its way up. So let's assume that from this position of entry to this level before it drops to this level, it is 1.3% take profit. Okay? It has gone high up by 1.3%. And it happened that this 1.3, it is the take profit we have set in our robot. So in this scenario, we are expecting the robot to sell because our targeted profit has been reached. Okay? Now, the robot is not going to sell immediately. It will wait for the price to drop with a callback. And that callback is that 0.1 that you were asking and the 0.01. Okay? So let's say that you did put 0.1 as your callback. When the price has gone up there, then it drops. This drop here of the price is equivalent to 0.01. Let's say that the price only dropped by 0.01. But you set 0.1. Is your robot going to sell here? If the callback that has been reached is the 0.01, is the robot going to sell? No. Because 0.01 is smaller than 0.1. So the robot is not going to sell here. If this price does not continue to drop, if it goes up, it means it is accumulating more profit. Because it has failed to sell here, it did not reach the 0.1, the price. So in this case, you see that your 1.3 gets to 3% because the callback is not being reached. So you are getting more. Okay? You are getting more. But this, it makes you to stay longer in the market. Okay? Because the robot is not closing the trade. So you end up staying longer in the market waiting for the robot to execute a sell. So there are people who says, no, I'm going to use the 0.01. Any slight movement, okay? Any slight movement, because 0.01 is easier to drop than 0.1. If we are to compare the two, this one is smaller, this one is big. So price can drop mostly. 0.01 is a small one, it can drop. then immediately the robot executes a sell. Then you're out of the market. That is the difference between 0.01 and 0.1. Did I answer your question, Achindri? Did I answer your question? Is it clear now? Achindri, did I answer your question? I'm not gonna leave until you respond. Okay. All right. Then it's fine. It's fine. Am I owing anybody here? Do I owe anyone here before I leave? Am I owing anyone? I'm ready to pay. Am I owing anyone? It can be the best according to you. It depends on what you want. Do you want to stay longer or you want to stay shorter in the market? As long as your targeted take profit has been reached, you don't want to wait. You don't want to keep accumulating the profit. You want to get out and look for another trade. So 0.01 is okay for you if you are that kind of a trader. Okay? So 0.01, 0.1, they are easy to reach. The only one that is a little bit high is the 0.3. That's why we normally edit it. The 0.3 is a little bit higher. But 0.01, 0.1, no, don't worry. If you are using those two, no, you're not going to stay longer. You get out. The robot will sell. Even the 0.3, it also sells. But I wanted you to understand what is the difference. Okay? So when you are choosing any of the two, you are knowing what you are doing. Is that okay, Michael? Is that okay? It is better to give you different options than you choose from there. What works better for you rather than dictating something for you. Okay? This robot of ours is semi-automated. It is semi-automated. You can edit and put settings according to you. So that's why we normally give you recommendations. We do not dictate what you should give the robot. My leader, KG, I think I can hand over the microphone to you and then close it for us. Thank you.
Well, thank you so much, sir. The session has been awesome. Thank you for taking us through the parameters in detail. And to other business partners, please continue to attend these sessions. And certain things will be understood as you get involved when you start applying these settings yourself. Like I see Kabaki saying they will prefer 0.3. For instance, it also depends on the type of coin. There are certain coins that move more faster or rapidly. And then, e.g., Bitcoin, for instance, 0.3% for Bitcoin, it's a huge percentage because Bitcoin, it's too deep in terms of liquidity. Like that's almost $2 trillion. I don't know where it's sitting at the moment. Market. So it means to have a 0.3% out of BTC, it's a huge movement of flow of money in billions of dollars that will cause such a move to happen. So if you have a callback of 0.3% in BTC, you will realize that actually it's too much money for you to just be leaving on the table. And in future, leader coach more, we will also try and make use of the candlesticks to plot these margin calls like horizontally, so that business partners can see exactly what we mean of the callbacks, for instance. I normally show some of the partners that I work with according to a callback. It means you have reached the target. The target is a take profit, for instance, in terms of profit callback. It means we have reached, or the price has reached the target that was set. And then if the pressure is too much, volatility is too much, or momentum is so much, the price will pass through that, will break above that. And then when the callback happens, it means it is the return from reaching the take profit target or from passing it. With how much return percentage-wise do you want to accommodate the robot before it can lock in the profits? Say, for instance, you leave your home, you're driving to a fuel station, for instance, or to a gas station. Your gas station, it's your destination when you leave your home. So when you reach there, you transact whatever you wanted to buy. And then when you leave, you will see the board mostly. That's what we see in South Africa, a board that says call back. It means you have reached us. You have arrived at our place at a petrol station, for instance, and they say to you, call back. It means come again, for instance, or something of that nature. So a call back here, think of it in terms of that. Your 2%, if you have a take profit target of 2%, the robot will hold that position until that 2% price mark is reached, or it is passed, or it is surpassed, or the price breaks above that, for instance, if you're on the spot market. Once that has been reached, nothing will pump forever. Sometimes, a take profit can be surpassed by more than 50%. In cryptos, it's possible. You wanted to collect just 2%, but the momentum is so extreme in such a way that you end up reaching 50%. So immediately there's a drop. That drop, it's a callback. It's a return from having achieved a take profit target, or from having achieved or surpassed a take profit target. So with what return, or with what drop, or with what different direction, like you going up, that is a target you want to do, and going down, it's a callback. It's the cancellation of the profits that have already been realized. So with how much cancellation percentage-wise are you willing to give away before the profits can be locked or can be captured and so forth? That is just what it is. So that those who are thinking of 0.3% being the best option or not, that will be dependent on the amount of dollar value that would have been achieved. So these things we'll try as we work together, helping one another, attending different meetings by different leaders until these things sink in us. What I love about the business friends and business partners out there is that whatever you think, you are able to implement it. The only thing that will restrict you is minimum parameters that have been set. For instance, if you want to make an attempt to open a trade of 50 cents of USDT, for instance, as a fed buying amount, the system will not allow that to happen. There are minimum amounts that the board would want you, or that are required on the exchange side before you can take a trade, for instance. So that will be the restrictions that you and I cannot adjust, for instance. So just like callback also, we can't go lower than 0.01, for instance. So, which is obvious, because you can't expect the robot to calculate a target that is negligibly small or not practical to be achieved, for instance. So this is what it is. Thank you so much for tonight. Tomorrow we are connecting. Communication is going to be released accordingly from different groups as it happens. And this has been awesome. Leader Coach Mo, we sincerely appreciate you. the work that you are doing and the kind of consistency that you have blessed us with. And we pray that may the good Lord keep you and sustain you and make you a blessing, not only to us, but to your family as well. May God keep you and uphold you, and more wisdom and more money to your crypto wallets and to your bank accounts too. So yeah, thank you so much for tonight, and we'll connect again tomorrow. Good night.
All right. Thank you so much, Leader KG. Blessings received. So guys, we are going to meet again tomorrow morning. That is by God's grace. If the Lord gives us life, we'll meet tomorrow morning in our technical analysis. For this session, we'll end up here, probably sometime next week on a Thursday as well. We'll come and expand where we have left it today. We have only done small capitals. We haven't gone to like $200, $300, $500, $1,000. You know, yeah, we needed to give those examples on how to navigate your capital. All right. If you are having more than that, how do you divide it and trade different coins? Because you cannot put $10,000 probably in one coin. It depends on your appetite. Okay. But the market is giving us so many opportunities that if we manage our wallet very well, then we'll be able to appreciate what enters into our wallet. So for tonight, let's part ways until we meet again. May the good Lord keep you safe, guys, until we are able to say, yeah, here we are again. So we love you, and please take care in the market. The market is not your enemy, okay? The market is not your enemy. It is your emotions that are your enemy. So markets will always bring opportunities. Your approach is the one that matters. So let's trade with care and make sure that we are managing our wallet. Thank you so much. Have a wonderful one. Bye-bye.